Hey guys, welcome back to a brand new video. I'm RexFinance, and it is no secret that CleanSpark's been one of those companies that I've staked my entire brand, image, and even YouTube channel behind because I believe just so strongly in what the company is doing with renewable energy, microgrids, and Bitcoin mining. Now, that's bit me in the butt just as much as it's helped out my YouTube channel because for those of you that are new here, I was actually buying shares of CleanSpark at around $4 a share. And I rode the share price up to the all-time high that we hit in late January of over $40 a share. However, the story doesn't end there. I also rode the share price back down to our recent lows in the mid $10 range. So I've been along for this entire roller coaster, but I honestly don't think my conviction has ever been higher for this company. In today's video, I'll be discussing the different macro factors as well as the micro factors or company-specific factors that are benefiting CleanSpark's share price currently, because we all know over the last 2 weeks or so, the share price has almost doubled from that low $10 range to over $20 per share currently. Now, for those of you that missed my last video, all of this going on behind me is why I have been away from making YouTube videos for a couple of weeks. We are getting all of the windows replaced at my recording studio here at my lake house, and it's taken a little bit longer than anticipated for them to complete this because they found some rot on the exterior of these windows. Now, that's all besides the point. I just want to let you guys know that that's what's going on, and that's why my YouTube backdrop is pretty atrocious. But without further ado, if you guys are new here or returning and not yet subscribed, I would really appreciate it if you hit that subscribe button down below. And with that, let's go ahead and get into this video. All right, so first let's discuss the different macro factors that are benefiting CleanSpark's share price currently. And to do that, let's first look at the 1-year chart. If we look at the 1-year chart, we can see that it almost looks identical to all other small cap, high growth stocks out there in the stock market, where we hit all-time highs in late January or late February before falling down and melting down basically throughout the rest of 2021 up until the point we're at currently in late October. However, what is different with CleanSpark's 1-year chart is this uptrend we've seen throughout the last month or so. Where at the end of September, we were in the mid $10 level, and we've almost doubled in share price to $20.35 currently at the end of October. This isn't something that's happened to all small cap, high growth stocks out there. This is pretty much CleanSpark specific. So what's different between CleanSpark and these other high flying, small cap growth stocks out there? Well, obviously the difference is CleanSpark is a Bitcoin mining company. And if we look at the price of Bitcoin, it has shown some major strength, recovering from lows of 30,000 up to over 60,000 and almost reaching an all-time high just recently. This leads me into macro factor number 1 that is benefiting CleanSpark's share price currently. It's the price of Bitcoin. It's the thought that Bitcoin is going to be a great inflation hedge. Now, that somewhat remains to be seen, but it's as simple as this. If people believe that Bitcoin is going to be an inflation hedge, it will be an inflation hedge because people are going to be piling their money into it, which is ultimately going to push the price up and hopefully beat out inflation and be a good inflation hedge, just like gold typically is. One way I like to think about Bitcoin currently is that it's basically a vacuum for trash dollars, where the investor is piling in their trash dollars, buying Bitcoin. They're trading their US dollars for Bitcoin, believing that Bitcoin is going to be that inflation hedge that they're looking for. So, obviously right now the price of Bitcoin looks very strong, and it's certainly looking like it's going to finish strong throughout the rest of 2021. But what does 2022 look like? And this is the big difference here. This is the big shift that's happened. People strongly believe that 2022 is going to be the year of cryptos because people don't think inflation's just going to go away tomorrow. They think inflation is probably going to be here for quite some time. And if Bitcoin does pan out and it is that big inflation hedge that we all look for, then the price of Bitcoin's likely going to keep going up. And guess what happens when that happens? The Bitcoin mining companies become ultra cash flow positive and ultra profitable, which leads me into macro factor number 2 that is benefiting CleanSpark's share price currently. And that's the fact that cash flow positive companies and profitable companies perform much better in inflationary environments than typical growth stocks or money losing companies do. And that's because the cash flow positive companies are cash flowing enough money, bringing in enough money to outweigh that inflation, because inflation is eating away at your dollars, making your dollars less and less valuable. But if you have more cash flows, you can continue to grow and not just see your dollars disappear, or you continue to lose more and more money. I recall recently in an investor conference, the CEO of CleanSpark, Zachary Bradford, stated that their goal is to hit $1 in earnings per share next year. They're well on track to achieve that right now, especially if the price of Bitcoin continues what it's doing. So, to review, CleanSpark is closely tied to what's likely going to be the best inflation hedge moving forward in Bitcoin. And on top of that, it's going to be a very cash flow positive and profitable company, which perform much better in inflationary periods. This leads me into my third macro factor that I believe is benefiting CleanSpark's share price currently. And it's what we just got done discussing. That this uptrend CleanSpark has seen over the past month or so has not been seen in the vast majority of small cap, high growth stocks out there. Most of those small cap growth stocks have continued their downtrends while CleanSpark has started to recover. So why is this a good thing for CleanSpark? Well, the reason this is a good thing is because it means there's a lot of money that is yet to flow back into small cap companies. And as that cash and money inevitably flows back into small cap companies, CleanSpark is going to benefit because it is a small cap stock. Now, I've used these charts on my channel in the past, but for those of you that might be unfamiliar with this, basically what we're looking at is the forward PE valuations of stocks in the stock market currently. So basically, according to their forward earnings projections, what their share price is at currently. That gives you the forward PE valuation metric. If we look at small caps, this bottom chart here, we can see that we're pretty much in line with what we've seen historically, if not slightly below what we've seen historically. This would signal that small cap companies are undervalued currently. And we can see that forward PE ratios on small caps peaked in late 2020 or early 2021, and they've been falling ever since then. However, that is in stark contrast to what we've seen with large caps. Despite them maybe coming back down to earth, large cap valuations are still higher than we've seen since the tech bubble in 2000 or 2001. Now, that can mean two different things, and both those things can be right. That it's very scary that we have not seen large cap valuations this high since the tech bubble, but also that tells us that there's a lot of cash in the markets right now that is likely going to come back to small caps at some point in time. I'm going to go out on a limb here and say it's inevitable. It always happens. Cash and money always finds the best opportunities, and right now, small caps are the best opportunities. So this shows us there's a lot of money in the markets right now propping up large cap companies that could come out of those large cap companies and will come out of those large cap companies and flow back into the small caps. So, because CleanSpark is a small cap company, this will benefit CleanSpark's share price as money flows back into small cap companies. All right, so let's quickly get into my fourth and final macro factor that I believe is going to benefit CleanSpark moving forward. And it's simply the interest in the stock market right now. We can see using a quick Google Trends search that interest in the stock market is pretty low right now. Interest in the stock market peaked in late January, late February, to no one's surprise when these small cap stocks were at their peak valuations. Now, as these small cap companies have fallen in price and share price, interest in the stock market has naturally left. You can also look at your favorite stock market YouTubers channel out there. It's likely that their views have been at least cut in half since late January, since late February. However, we can see towards the end of this as well, interest over time chart, that maybe interest is starting to come back into the stock market. This again would be beneficial to our small cap stocks because the retail investor, which is what this Google Trends search is tracking, is gaining interest in the stock market again, which means they're going to be flowing money back into the stock market, which is a good thing. The more money flowing into stocks, likely the higher the price is going to go. So in the last two macro factors that I have discussed, it looks like we might be turning that corner in the stock market, where interest is coming back and small cap valuations might be starting to pick back up again. It's typically directly correlated with this Google Trends search, which is very interesting. The small cap forward valuations and the stocks search term. Anyways, bottom line, all four of these macro factors are likely to benefit CleanSpark going forward. But now let's get into the good stuff, the company-specific stuff, the stuff that CleanSpark is doing right that's leading to their share price outperforming all of its peers. The first company-specific factor that I want to discuss in this video is the fact that institutional buyers are funneling back into the stock pretty heavily currently. We can see this just due to the fact that our average volume on any given day has almost doubled over the past month. During the time CleanSpark's share price was hurting, we would be lucky to get over 1 million shares traded on any given day. You can see just today, we almost hit 2.5 million shares traded. And anytime you get a big bump in volume like that, it generally means that institutional buyers are stepping in, big money is falling back in, any way you want to slice it. The reason this is a company-specific factor is because it usually is a direct result of the management team's efforts that institutional buyers are stepping in and starting to buy your company. Now, yes, as I already discussed, there's going to be much more institutional buying and big money buying back into the stock simply as large cap valuations fall and small cap valuations get back in line with where they should be at currently. So when we break it down, there's simply just way more buyers of the company right now than there are sellers, which is bidding the price higher and higher. And to be honest with you, I'm speaking for myself, but I also have a pretty large community here on YouTube, and I have a pretty decently sized community in the members-only Discord server. Most of you, I would assume, don't plan on selling your shares of CleanSpark anytime soon. You're probably going to hold on to your shares, which just decreases the total supply of shares available to be bought, which is just going to push the share price even higher. All right, now let's get to the second company-specific factor that is benefiting CleanSpark shareholders currently. And it is this press release. The title says CleanSpark uses Bitcoin to fund 4,500 newest generation miners, amounting to an additional hash rate of 450 petahash per second. The two words that I'm highlighting on the screen right now are what matters. They used Bitcoin to fund their new miner purchases. The reason this has been so beneficial, in my opinion, to CleanSpark's share price is because they've officially been the first Bitcoin mining company to do this, where they didn't dilute shareholders to buy new miners. They didn't borrow money to buy new miners. They sold Bitcoin at a massive profit to buy new miners, which in turn will replenish their supply of Bitcoin over time relatively quickly. So, in stark contrast to the vast majority of other Bitcoin mining companies out there, CleanSpark is not diluting shareholders for all of their capital needs. The management team has shown they are willing to sell their Bitcoin to make relatively large purchases, whereas other Bitcoin mining companies have been diluting shareholders for, quite honestly, all of their capital needs. Most have diluted shareholders to pay for new miners. Most have diluted shareholders to buy Bitcoin outright. Most have diluted shareholders to pay their salary and wages. Most have diluted shareholders to pay their hosting fees to have their miners hosted at other facilities. Most have diluted shareholders to pay off their debt or their interest payments. They're essentially funneling money away from shareholders to pay for their business. Meanwhile, they're getting paid salaries and wages and all this other stuff that's benefiting them. But what benefit is that to the shareholder if all you do is dilute your shareholders? I mean, sure, most Bitcoin mining companies out there hold thousands of Bitcoin on their balance sheet. But to what appeal? Why? What's the point of it if you're not going to benefit shareholders? And if you're just going to dilute shareholders to pay for those Bitcoin? And if the Bitcoin is just going to sit on your balance sheet and you're not going to sell the Bitcoin, where are you going to get the cash to pay for new miners or pay your wages or pay your salaries or pay off your debt? All this other stuff. So in my opinion, the markets are seeing that CleanSpark is they're doing it right, simply put. The last micro or company-specific factor that I want to talk about in this video is also included in this press release, where they say it amounts to an additional hash rate of 450 petahash per second. This is in addition to CleanSpark's previous projections for their Bitcoin mining business. They're essentially, at this point, going to have 1 exahash more power than they originally projected by the end of the year. That's pretty remarkable. So they're beating their own projections, which in turn is also helping increase the value of the company to prospective investors. And when they see CleanSpark was valued the way it was valued, and even right now I can make a strong argument that CleanSpark is still undervalued, investors are seeing the opportunity and they are simply buying in, and people simply aren't selling their shares because they know what they own. They know what they own is undervalued, and they know that in the future, the company's not going to be undervalued anymore. Anyways, I'm going to end this video here. If you guys are comfortable sharing, please write a comment down below telling me how many shares of CleanSpark you currently own. And if you guys enjoyed this video, I would really appreciate you hitting that like button. And lastly, if you guys are new here or returning, not yet subscribed, I would appreciate you hitting that subscribe button. And I'll hopefully be back with a brand new video next week, depending on when they get all of this renovation wrapped up. Have a great rest of your day. Have a great weekend. Peace out.